Hello and welcome to our latest urgent market update video. Now today is Wednesday the 14th of September 2022, and of course yesterday we saw some massive selling due to higher than expected US inflation, which actually came in slightly lower month on month, but certainly not in line with market expectations. So we saw some very significant corrections across most major markets yesterday. Now, the question we're going to ask over the course of the next 5 to 10 minutes is, where do we go from here? So without further ado, let's explain why we saw these CPI numbers, and we look at the market reaction along with some very important correlations as well to be mindful of. Just before we begin, if we could start with our risk warning. Of course, this is an informative video, so please take a brief moment to familiarize yourself with the risks involved in trading financial markets, and do take a brief moment to see our risk warning currently up on screen. So let's get straight into it then. So we'll start with the news event from yesterday. So if I bring up our calendar, we can see yesterday, the 13th of September, we had CPI numbers, and really the focus was probably more on the core CPI numbers month on month, excluding food prices and energy prices. And that came in considerably above expectations. So the markets were pretty much pricing in 0.3. We saw a very significant upside on that 0.6, but also on the headline rate. So the markets were expecting year on year the inflation story in the US to improve from 8.5% down to 8.1. But because we saw a higher than expected headline CPI number yesterday, we actually we saw a year on year improvement down from 8.5% to 8.3. Now that fundamentally caused an awful lot of volatility in yesterday's market, and I'm going to show you that volatility now across all major markets. So we're looking across the US indices, massive selling. You can see the range of the previous days, nothing in comparison to what we saw yesterday. Also the Nasdaq. Looking at gold, you can see we drifted sideways for 2, 4, 6, 8, 10 days, 11 days, and all of that was completely wiped out in one trading session. Similar kind of analysis across the dollar. So when we got risk off market conditions, we're looking for opportunities across the dollar, the pound dollar, the euro dollar, New Zealand dollar. We saw massive moves yesterday, and we're able to capitalize on those moves and generate some very significant returns in yesterday's markets. It wasn't just the initial market response that was going to interest us as traders. It was also the impact that it would have on the bond markets. So if we just bring these up very quickly, over the last 2 days, we saw a sizable move from roughly 3.57 up to currently 3.78. So a sizable concern with US Treasury yields. This is the 2-year, a sizable move to the upside. And then if we compare and contrast, don't forget we're trading inverted markets, bond yields at the moment, but this is the sizable move again over a similar period to the upside for the 10-year note. So these are inverted. We do have a higher rate across the 2-year and the 10-year. So that generally implies that we've got a recessionary type environment, and that is absolutely the case. We're currently technically in a technical recession in the US. So really, it wasn't just the numbers, the fact that it disappointed the markets. The markets were pricing in a lower headline CPI number, came in above expectations. So inflation is stubbornly high. Of course, growth, there's concerns on the growth side, and there's concerns about a recession approaching. And of course, we've got war in Ukraine. We've got issues with energy prices and food prices as well, as we roll into a very difficult winter period. So the question for us now, which needs to be asked, is what's next from here? Now, we've been broadly quite negative markets all year, and it's not to say that we were able to capitalize on a bit of buying towards the end of last week. Going into the CPI number, we were able to book in profits up these higher levels and then look for the sell trade post CPI. So we're able to look for buying opportunities in the markets when they present themselves, when there's an air of kind of positive sentiment in these markets, and there's certainly technically risk on market conditions. But then when that can change quite aggressively, we're willing to change with it. And that's really what trading these markets is all about. So we had the news event, we saw the initial market reaction, which was very bearish, but more importantly, we saw bond yields tick really quite aggressively to the upside. And all that really means is that it puts pressure on the Fed to further rate hike. So those traders and investors that were talking about a pivot, perhaps the Fed might not be as aggressive as perhaps they probably need to be, is all by the buy now at this stage. So really we have a very hawkish, very aggressive Fed, and they're leading the way, and they will continue to do so quite aggressively until they get this inflation story under control, which it currently isn't. Those of you that were very familiar with the whole inflation story, you'll know over a year ago, the central banks and politicians were saying that inflation's transitory, there's nothing really to worry about, and now they've got a lot of pie on their face, and they're trying to spin the situation, but at the end of the day they were asleep at the wheel. That's the harsh reality of it. And the problem is, the higher the inflation goes and the more sustainably stubborn inflation happens to be, the more aggressive we have to get with rate hikes, and that's going to be the same across the Eurozone as well, and the UK. So the question is, what next for these markets? For us, it's more of the same at some point. So we're looking for selling opportunities in these markets. We're currently, as you can see so far in the trading day, we're currently seeing a little bit of a dead cat bounce, a little bit of positivity coming in at these lower levels across all these very liquid markets. The reason for that could be, there could be a variety of reasons, probably a little bit of profit taking. Would we as buyers be out and out aggressively bullish in these markets? Probably not. It probably won't end that well. So any bit of buying, we're going to be looking for the rollover trade back to the downside. So our bias is very much to the downside across all major markets. We're talking about risk off markets here. So we're looking at US indices lower and the US dollar to continue to strengthen. So that's really what we're anticipating in terms of, what now from here. We were able to capitalize on the selling. We were able to get into 4 of these trades yesterday, generate significant profits on each trade. Those of you that were trading us live were able to capitalize on those trades as well. And that just about concludes this particular video. So we hope you found it informative. Information is the key. The more you know and the more you understand about these markets, the better you become as a trader. Of course, you might have questions about anything covered in this particular urgent market update video. So do feel free to email us at support@thelivetrading.com if you do have any questions about anything covered or anything trading related as such. And so that's just about it. That will wrap up this video now. Just before you go, so firstly, thank you, of course, for joining us. Do stay tuned for our next video. But just to let you know, we do broadcast our trade plan session live every morning at 7:30 a.m. and this is UK time, and that allows us to be prepared for the opportunities for the day ahead. So being able to create a trade plan, have a plan for you to follow, which can identify where the best opportunities are likely to be, what direction we're looking to trade those markets, and the prices in which we're looking to get into those markets is all very, very important information for any trader trading any market. In addition, we do trade these markets live. We broadcast our trading screen, go through the whole process involved and all the different considerations that traders need to make, and in terms of analysis and application, and mindset and risk management and things of that nature. So we cover all these things in a very live, dynamic environment. You're open to ask questions as you go. And we do this from 8 a.m. for the European trading session, and again from 12:45 p.m. UK time for the US trading session. So if you do want to trade those markets, you're very welcome to join us. For more information, just go to our website, thelivetraderoom.com, and you feel free to contact us through our chat function as well if you need. So from everyone here at the Live Trade Room, thanks for joining us for this video. We'll see you next time. Bye for now.